There are a number of ways you could determine the size of your stop, but today I'm going to show you one way that I've used that is based on my actual trading, and it might be something you can put to good use. But before we move on, let's keep in mind that all information in this video is for educational purposes only and is not an offer or recommendation to trade futures, stocks, options, or Forex. So let's move on. I'm going to bring over my trade performance. This is for the last, well, yesterday, and I think I had one trade today. So you can see the various trades we traded ES, and there's some 6E, the currency futures there. But what I do is I right click on this screen and then export, and export this Excel file to wherever you would like to save things. I'm just going to throw it on the desktop. You can see I had a few here earlier this morning, and this is 9:28 a.m. so I'm going to go ahead and save that. And now what I'm going to do is I'm going to bring over that spreadsheet. Let me enlarge this, and it's really simple if you do it step by step. And over here you see the maximum adverse excursions, maximum favorable excursions. This simply means how far did the price go against you while you were in the trade, before you closed the trade or before you were stopped out. And this is the reverse. This is how far did the price go in your favor while you were in the trade. So what we have to do before we manipulate this is first select both columns of data, like so, not including the heading. And once you have those two columns selected, go up to this little triangle and select Convert to Number. Now we've converted that all to numbers. Now we can manipulate it with some Excel equations and formulas. What we want to first do is we want to add up this column of adverse price action right here. So select this bottom blank cell and then type in the equal sign, and then the word sum, S-U-M, and then put a parenthesis, and then select all the numbers in this column, and then end parenthesis right there, and then the forward slash, which means divide by, and we're going to divide by 20, and that's because there's 20 data points in this column. And you look over here and it says 21. Well, there's one of the columns, I'm sorry, one of the rows is the heading row, and we don't want to include that. So 21 minus the one heading row, that leaves us 20. So I'm going to type in 20, and I hit the tab button. And we see that our average adverse price action while in a trade was $46.25. Now while we're at it, let's do the same thing for the favorable movement. So I'm going to hit the equal sign and SUM for sum, parenthesis, and then select all these numbers and end parenthesis and forward sign, forward line for a divide by, and same 20 trades, and hit tab forward, and you've got $72 as the average. Now we've determined an average dollars that our price went against us while in the trade, as well as the average favorable. So we can easily find out what our reward to risk is. And if I were to come down here and again type in the equal sign, select the favorable excursion, the $72, by clicking on there, and then hit the forward slash line again, which means divide by, and then select the average that price went against us, like so, and then hit the tab button, and we see that we had a 1.56 reward to risk. It's not the best in the world, but it's certainly a ratio that you can make some money from. So looking at this, you might consider using a stop of excuse me, $50 and maybe a target of 75, and then do a little back testing on that and see whether it performs well for you. Now this is a small sample statistics. It's only basically a day's worth of trading. Ideally, you'd want to have maybe a week's worth of trading and do the same process. Just make sure you select all the numbers in the row and calculate the adverse excursion average as you see here, as well as the favorable excursion number here, and gives you a better idea as to what might be a prudent stop size and also target size as well. So I hope that gives you some help on that. And as you move forward, we want to encourage you to sign up for our free Indicator of the Month Club. It's a great way to save hundreds of dollars on our indicators, and they're free. It's a great way to gain greater tools in your arsenal as you go forward trading. Thanks for spending the time.